Good morning. All right, let me get the charts up here. Okay. So yesterday, kind of intraday was was a
Good
good
morning.
One second here. All right, let me get the chart. We had some movement up in the morning, flat in the afternoon, and then that nice move to the downside that we got late in the day. Overall, really not a big deal. Just kind of forming a trading range within a trading range here. Significant level up at the top. There's the swing high, and down here in the prior week, the swing low. For the moment, we're just chopping around here as everybody kind of figures out. Yeah, I wanted to condense the data, Alex, a little bit, just kind of get this in here. It's something I've always used over the years when I want to squish up the intraday data a little further. So you see the retest that's happening here, overnight on the smaller time frames, and now it's pulling back, and things are just kind of flip-flopping back and forth here. So not a big deal. We just have to wait to see, what this market, I guess the end of the week, unemployment numbers, some news, Corona, which, earlier this morning, the news was, the market's up on, some positive news about maybe opening. The other day, it was China tariffs again, which no one's talking about that today, but that could raise its head at any moment. Mr. Schizophrenic here. So it's a news-driven market. It flips from one day to the next as to what the news is that, the market focuses on. It makes it a bit uncertain, to say the least. And that's what trading ranges are about, uncertainty. And the tighter that they get, the closer we get to getting out of that range. Now, is it tight enough yet? I'm not sure. I don't think so. We start the day so far with an inside day, looking at the futures. And so kind of, rather tight. And we always look at the credit spreads on Monday, Wednesday, and Friday. And as things get tighter, the spreads are contracting. It's going to make it more difficult. But the no-brainer would be, I think today, would be an Iron Condor. If we could get it above this level up here and down below this level, this might be a little too tight, but it certainly could work somewhere in between here. This low from, I don't even have my dates on here, do I? Yeah, from the 4th. And up above here, the markets, as you can see, we've got a bit of a void, and it could rally back up toward those highs or somewhere in there. So as far as intraday goes, down below this level here, around 28.43-ish, short, which would test that low. And up above here, we look for longs to go back up toward the high. And so relatively small voids. You got to be careful what we call getting, froggied or chopped up, the frog in the blender here. So Condor means you think market will stay in the trading range. Yes, exactly. Now this is relatively wide, but because of SPX, this instrument, if there's premiums above and below here, I think that is a good odds trade. So, we'll just have to see. Right now, yesterday's high would be our first reference point of resistance. Down below yesterday's low, there's the unfilled gap. It's not that far below. So more aggressive traders would be picking maybe a spread up above here and down below here, not necessarily below the swing low. If there was the premium below here and above here, we use the word a little loosely, I suppose, because there's no guarantee, but I think that would be a no-brainer. We just have to hope no crazy news comes out. But for now, yeah, I think we're in a trading range. But we got a trading range for now within a trading range. Yeah, getting closer to the danger zones. If you want Alka-Seltzer moments, you get close to the danger with the spreads, because these SPX spreads, they move a lot. But the attractive part of them is the leverage and the premiums that are available. And they expire on the same day, so you can control the risk within that day. So they're a great instrument for creating income and controlling risk if you know the good levels, what we perceive to be the good levels. And so, we do this on a regular basis, and it's been working out quite well. What expiration do you use for condors? Martin's asking me. Well, as short as possible, Martin, because time, is risk that related to news. So as far as these credit spreads go on the spiders and SPX, Monday, Wednesday, and Friday, they expire by the end of the day, which is very attractive. Right? It's a one day trade. And, sometimes we get them in the morning and we wait all day. And ideally, they expire worthless at the end of the day. Right? As Clinton said, there's no gap risk. Whereas, you could put on a call spread or a put spread in some stock. And if it's a weekly expiration, you got to wait until the end of the day on Friday. Or you can go out another week and you can go out 30 days. There are plenty of services out there that say 30 days, 40 days to get, your premium and let the trade work out. And those are pretty much the services that don't look at charts, and they roll and roll and roll because they can't decipher whether something's going up or down. So they put on trades based on Greeks and volatility and often get it wrong. Anyway, let's get to the markets. So we know what the S&P is. The NASDAQ futures have been showing relative strength, and you can see the trading range. Same deal here. Pivot high, pivot low. We had that big rally day last week. We broke down below the low of the wide range bar. That's bearish, but it's beginning to survive. So, we've got an inside day here. Which way is it going to go? I don't know. Forget that's green, but, we've got resistance. It could go up to the high here. Does this become an M top? So we have all these, if this, then that, well, what about this? And all of that revolves around the uncertainty of a trading range. If it was going up, it was in an uptrend, and here we've got, a downward move on the weekly, an upward move on the daily. So those are in opposition, and this is within a trading range. So it's almost a textbook ideal picture of uncertainty and kind of waiting which way is it going to go. So only those that have the most clear crystal ball, that know all there is, can tell us which way this market's going to go here. But YM, trading range. There's your pivot high. There's your pivot low. It tried to go higher yesterday and failed. We've got an inside day today. We got this resistance up above here. Consider longs. Down below here, consider shorts. Down below here, bombs away on the short side. Where it stops, well, we just look to the left and look where the next level is and see what happens when it gets there. And if it gets below there, we look at where the next level is and we see what happens when it gets there. Right here, we try and stay out of the chop and not get, destroy our accounts with commission generating trades. So intraday trades, we find them almost on a daily basis. Swing trades, there's still some good looking stuff out there. You know, a lot of it started to fall apart yesterday when the market sold off. So that's what happens when, you know, things are indecisive. The Russell, you know, this certainly has the look it could survive, but look, this looks to me, it does. If this gets below that low, I know there's another level here, but it's been tested once. So I'm going to kind of discount this level a bit, because if prices break below this low right here, I think it's just heading considerably lower. What's Dan telling me here? Dan can't get into Zoom. He's always got some kind of technical problem. Anyway, all right. Crude oil getting sold here. Dan is like, you know, you say people have a green thumb for certain things. Well, when it comes to technicals, Dan's got a bit of a brown thumb. But it's amazing, the consistency. Anyway, oil coming in a little bit, you know, it's at resistance. Got a nice move off of the low here. We'll see how far it goes. You can see the wide range bar to the downside. You can see the M top here. So probably going to get some choppy action here. A little bit more to the downside. It's got room. Bonds, right? Spent quite a bit of time up here at resistance. Now it's broken. Expectation is it's coming down here, right? And it's that simple. What we look at, we look to the left, and it went up fast, went into resistance deep. It looked like it was building a base to go higher, and it failed. So the assumption is it comes down here. And it's that simple. There's nothing between here and here. And you can draw your fib lines, trend lines, put your moving averages on there, anything you want. That's all fake news, right? There's nothing here. Well, the sooner you come to grips with getting the fake news off your charts, the easier trading becomes. And what else we have here? Gold. Down here this morning, but within the trading range. Chop City, right? Avoid that. Silver. Chop City, right? Trading range. Look at it. And obviously, you make it green. And if you're an intraday trader, you can take advantage of smaller time frames. That's all good, right? You got to pick your time frames and decide if that is the place where you want to operate. A lot of people do, and they do it too soon. That's why they don't succeed, besides no money management. And let's see, is Dan back yet? Daniel has made it back. Okay, transports, right? The airlines, the cruise lines all look terrible. You know, if the transports get below this low here, right, you can see it's around 139-ish, and we start seeing the Russell, which tends to move with it lately, going below that swing low. Odds are, right, you're going to see the S&Ps dropping. The NASDAQ will hold up better than the rest, but they'll go down. And until this gets resolved, where we get out of this range, within a range, probably best to stick to the intraday trades with a few things that look great, or, you know, we'll see what something like Beyond is doing that's up here on earnings and so on. So it's a stock picker's market for sure, not a market to be throwing, you know, situation of just getting anything that's out there and making money. Certainly not that kind of market. So All yours, Dan.
All right, good morning, folks. All our opens seem fine, so unless you have a question, I want to go right to gappers because we have so many of them, so many earnings today. LUV, not in earnings, but I like under the low. I'm having problems here with some certain stocks here not giving me multiple time frames, whatever. We'll just look at the price here in the minder. So that's why I like LUV under the low. ZTS earnings, that was a bullish pattern. Now it's gapping, well, it's gapping right to the middle. I would have liked it better if it were gapping to the lows. Then we would short a 10 or 15 minute low, but we'll keep an eye on it. Waste management, gapping up $100. It's still in a range. Sting, that's one of these oil tanker storage things. It's a mess. Shop was up earlier. Was up. Now 674, down $12. Nothing really to do now. Resi looks horrible. Monday had a nasty gap. That just looks horrible. I'm gonna delete you. Plug. One of these little that's a mess, but that was a bearish gap, a little kind of bear flag under yesterday's low. Under yesterday's low, this looks like a short. Can't tell where you're gapping. Trading range here, showing relative weakness. KKR, there's nothing to do there. Trading range. Ions will come back. GPN up $12. 180, that's a bullish gap up. We'll watch that on a pullback. Wow, look at this. Today's show, folks. I'm gonna have to put that in the do a slide of that. That is a beautiful ascending triangle. Wow. And that's today's subject on MT Live. That's a beautiful one. Let's put that in a little window. GPC down $1, $74. It's on support, but it's a sell setup on the weekly. We'll keep an eye on that 30-minute low. Gold, has been strong, slopping around. GM auto, the cars obviously have been slammed. Layoffs, nobody buying cars, and it's gapping up. So the only, Debbie's, I don't know if Debbie's here, but the only reason it's gapping up is because whatever they announced, and I don't know what it is. Well, is it really good earnings, Ahmad? The point I was going to make was, I don't care what they announced. I mean, think about that. How can anybody have good earnings unless they're one of these stocks that's a beneficiary of the coronavirus? A side note, you've always heard me saying recently, we trade the charts, not fundamentals, but it totally shocks me, this rebound off the low, this bear market rally, and where the market's holding so well. It's shocking to me. And I saw a headline on CNBC that said, the NASDAQ, not the Qs of the NASDAQ 100, but the composite, is 1.8% off the highs. Folks, think of that. March, 2 months ago, if you were to ask me, hey, Dan, what do you think the odds are in 2 months that we're going to be 2% back off the high? I would be like, what hallucinogenic drugs are you taking? Oh, down for the year? Okay, thanks for that clarification. Thanks. Because yeah, we're more than 1.8, and that's why I thought they were just talking about the NASDAQ composite, but thanks for that, Dan. But same comment, same comment. So yeah, 1.8 down from the year. I would say absolutely you've lost your mind. So, okay, but I know you don't fight the Fed. I get all that. We're in very interesting times. Yes, there's monetary and fiscal stimulus that's record, you know, I think it's more than the Great Depression. I don't get it. I need to go back to grad school. I mean, you know, unless you're going to say the Fed's just going to sit there and start buying equities and have a put under everything where try to make it go down, sell more, I'm going to buy it. I don't know. Let's keep going here. It's just something that's shocking to me. All right, let's continue. Fun. It had its little bounce. It looks lower. Fossil. Wow, you're a dead animal. Fossil is one of these retails. Remember the Fossil watch people used to watch? I mean, to wear. This used to be a high flyer, Fossil. So you're a dead animal. CBS 63, trading range, nothing to do, but maybe that's a Condor candidate, similar to the spiders on CBS. Cody, you're got no interest in a $5 stock. CHK had reverse splits, had earnings. I'm not messing with you. Cars, Hertz had earnings yesterday. Hertz looks horrible. This one looks better, gapping up $5. There's no directional pattern, but 30-minute high. You know, if there's any juice there, it could be a put spread. Jake, Piton, we have a put spread. Were earnings before the market or after the market? TJ, I don't know if Hertz filed already. I read in the paper that they're a major creditor who will be the one to put them in a bankruptcy if they don't do it voluntarily. So it gave them 2 weeks. All right, let's continue. Look at Beyond Meat. Yeah, I'm not getting pre-market on a number of things, but on my other computer, it's trading at 112. Gapping up to the prior high, so nothing to do there unless possibly a put spread on a pullback. Bravo Golf gapping down $36. This is a good one for a 30-minute low. Let me put that in a window. 30-minute low. Hey, remember Mealy? Mealy, we were gonna do a bull call debit spread on earnings because I love the pattern. I love this gap reversal 1, 2, 3. I love gap reversal trades that snap right back in there. Love those. And I rarely do option directional trades, but when we do them with debit spreads, and the spreads were just atrocious. Otherwise, that was a candidate for us. I can't tell where you're capping. ALXN, that's a mess. AEP, gapping up a little bit, but you're a mess. ACM, mess. Y, 30-minute low. That's a breakdown trade. So that looks lower. Let's keep that on the list. SMG, you're a mess. Although if it takes out the week's low, it looks lower on the weekly. Space. Gus at Tavo, you're back from LA, it looks like. Space 1786. Gotta mark it off. There's no price void. So, you know, even though it's gapping up on the 15-minute chart, you got a wall of resistance, Jake, on daily chart. SMG 135. Yep, that's a bullish breakout. Yep, but you know, you gotta figure out your entry and stop, and whether it's a directional or put spread. WU, these, you're junk, you're gone. Junk, Voya, junk, Trip, junk, SU, junk, STO, gapping up to 19. Bottoming pattern in a trading range. If you want, maybe if you want to come back and do a 30-minute high, well, I'll leave it. We'll, yeah, here's space I was giving to it. SFM. I can't tell where you're gapping, but you're up 4 bars, so no interest. Debbie, you're Prue. You like insurance companies? 57 bucks, gapping down a little bit, but no pattern. Pins getting whacked. Wow, that's getting whacked way down here. Let me put that in a window. Peak, 25.50. I mean, what are you going to do with this? There's nothing to do. It was a bullish play for me on earnings, didn't work. All right, no problem. You don't, no problem. You don't have to win every earnings. You know, you have a bias, you have a trading plan, you have a systematic procedure. But nothing here. You're gone. PAA, you're gone. Oxy. Oxy. It's a bottoming pattern. It's you know, let's see if it can get its sea legs. Garbage. Mix 80. There's a bullish gap. Mix. Yeah, mix looks good. Let's watch that for a 30-minute high. Yeah, that looks good. What's wrong with these certain time frames? Saying unable to access the cache data. Mattel, trading range, you're a dog. Actually, under the Monday's low, looks like a short. What's gapping right there? Actually, it is gapping under. It is gapping under. The low here is 857. Ah, so that's a short idea. Alex, I didn't do it. I would have done it with a call debit spread. All right, Mattel is an ugly gap. 5 or 10-minute low. Looks lower. So keep that on your watch list. Lima, there, whoa, Lima Charlie looks horrible. That's a descending, well, it's not a textbook descending triangle because it's kind of a channel. It's a trading range downtrend. Did you really, Alex? Fantastic. This thing looks horrible. This looks like a core short, even though it's $6. Let's short a 5-minute low for a swing trade. Same with Mattel, a 5-minute low. Let's watch both of these 5-minute lows, Lending Tree and Mattel. Clack, trading range, Condor, you know, this is another Condor for Friday, McGraw. Here's your support, there's your resistance. See if you can get anything there for us. KGC, I'm holding strong. HTA, bottoming pattern, hollow. Very strong, but extended, but we'll see if it can go sideways. CXPD, breakout failure. Excel to extended for me. EXRI, bottoming pattern, relative weakness. EV, well, there's a bullish gap, but extended, maybe 30-minute high. EQR, nothing. ENPH, there's no price void. Edit, needs to go sideways more, but I like the 100% move, and I like the 180 reversal on the weekly. Echo Alpha, bearish gap down, so the 30-minute low. This is a call spread candidate. That's a shock pattern. That's a bearish gap. That was a bullish bar that closed on the breakout. So when I say what I'm doing here, folks, is giving you my tier ones. So I need some help monitoring them now. So call spread candidate on Echo Alpha. I'll put it in a window. Yeah, I'm sure it's going to be spready here at 9:33. High ball on the highs there, 122, 21 by 52. That's for Friday, going out to next week. Yeah, he's a jerk. 13 cents by $1 are the calls. Jerk. So yeah, Microsoft, we got a put spread. We got a put spread on Facebook. On Apple, we met our target. Tesla, we have a put spread. Or no, Tesla, we met our target yesterday. Netflix, we entered. Looks fine. 30-minute high. Looks like you can add. AMAT, we're long puts with a stop over yesterday's high. Boeing, we have a bear put debit spread. LUV, I like under the low. Same with AAL. Under the lows, looks like a core short. Zoom popping. Echo Alpha I mentioned, but he's too whippy right now. Mattel I mentioned 5-minute low. That's already down a bit. Mitch is moving uptown. That was a nice bullish gap I mentioned. But it's okay. Now it's 9:35.